Welcome, guys, to the Accounting Basics course for the busy entrepreneur. My name is Amit Bandu. I'm a CPA and founded Bandu Tax Professional Corporation. I've been helping small businesses with the accounting and taxes for over 3 years now. I have over 10 years of accounting experience. I've worked with the government, including the Canada Revenue Agency as an auditor. My experience has taught me that small businesses need accounting help. However, many of them find the fees overwhelming or the time. They cannot find the time to do it and find accounting itself to be daunting. So my task here today is to try to make that easy for you. So let's get started. Accounting basics for the busy entrepreneur. All right, so your accounting is made up of really 5 components: your assets, liabilities, revenue, income, or your expenses. Now, the last part is the equity. This is really what your business is worth. Equity is how much is the cumulative wealth of your business. And it's really an important component that business owners need to be aware of, because you're going to be taking money out of your equity to fund your personal expenses. First, we're going to start with revenue. As you start any business, your goal is to make money. And you do that by making sales, by earning income through either providing a service or selling a good. So what does revenue mean in terms of accounting? It means it's an inflow of economic resources through the use of assets and spending. So you're using the assets that you have in your possession in order to generate your sales. So you're buying stuff and selling it at a profit, or you're providing your services. You're using your economic resources, which at that point is your education if you're providing a service, in order to provide, and you're using that asset to provide a service to your customers, and that's how you earn money. So it increases your assets or decreases your liabilities and increases your equity. And it goes on your income statement or the profit and loss statement. So really, sales are something you need to track. You need to be aware of how your business is doing in terms of revenue, what products are providing the highest profit margin, right? What products are easy for you to sell, easy to market. And the flip side of revenue or income are expenses. So they mean an outflow of resources, which generally help you make those sales, right? You would have a business expense. The expense itself would allow you to generate those sales. And it also is reported on the income statement. So you have your income and your expenses. You need to know how to report those. So I'm here to tell you that I'm going to next week have a live session again regarding QuickBooks Online. So QuickBooks Online is something that many business owners use to report, to do their accounting. So I use that for most of my clients. A lot of my clients use that for their own purpose, do their own bookkeeping, and they just get my help on an ad hoc basis because they have an issue. QuickBooks tries to make the software very user-friendly, and I'm going to go through a quick session on how you can really do your bookkeeping on QuickBooks next week, same time, 10 o'clock. I'm going to be live, so be there. So I've already told you, but the basic that you need to report, your revenue and expenses, and that's going to make the majority of your bookkeeping. I'm taking myself out of the picture here because so you have a better view of the expenses here and on the slide. I mean, next we're going to go through the other side of your accounting, which are your assets. Your assets are really what you own, right? They are intended to provide an economic benefit to the business, and they help you generate income. It belongs to the business, and they are reported on the balance sheet. They are the fixed assets or current assets. Current assets could be anything such as accounts receivables, cash, your bank account, short-term investments, etc., etc. Fixed assets or long-term assets would include property, machinery, land, etc., etc. Your liabilities are really what your business owes are an obligation of the business and imply an outflow of resources, usually cash, to satisfy that obligation. They help you acquire assets and generate those income. So really, as a business, you might not necessarily have the most available cash to buy your assets. So you would obviously get a loan from banks or creditors in order to help you acquire those assets in order to generate income. So really, the liabilities are the business creating an obligation with the intention of using that resource to generate cash, to generate income. And it's also reported on the balance sheet. Equity is really the residual value of the business, right? So you have the assets on the first end of things, and you have liabilities on the other end. So, assets, whatever you own less whatever you owe gives you your equity, right? It's pretty much your sweat. If you're an owner manager, it's your sweat that that you put in your business. Your hard work, right? It's your residual stake in your business, and you obviously would want to take that out of your business either through an owner's salary or a dividend or whatever it is, or you would keep it in the business or reinvest it. The structure of your business is very important as well. That I'm going to really tell you that if you're a sole entrepreneur, you're the only one in the business, you would have the option of having only two types of business structures. One would be a sole proprietorship, and the other one would be a corporation. The corporation pretty much would be considered another complete entity apart from you. Whereas if you're a sole proprietor, your business is considered part of you and is reported on your actual personal income tax return. Whereas for the corporation, you would file a separate corporate tax return, and any drawings, any withdrawal that you take out of that corporation has to be recorded and reported to the Canada Revenue Agency. Whereas if you're a sole proprietor, you just report all your income and expenses on your personal income tax and pay the taxes on the whole amount. So even if you're reinvesting your money in your company, you would pay the taxes on that first. So that's one of the incentives of trying to incorporate if you're intending to reinvest, your extra income in your company. Okay. So we've gone through all the components of your account, right? You have your assets, liabilities, your sales, your income, expenses, and your equity. This really is your business, right? So how much you've made, your sales, how much you spent, your expenses, how much you own, your assets, and how much you owe, which are your liabilities. Equity, assets minus liabilities, pretty much, the residual stake that you have in your business. So assets, what you own minus what you owe is equal to equity, right? The equity is really your initial investment, right, that you put in the business, and the income that your business has made throughout its existence, right? Not every year, but the cumulative for every year minus any drawings that you have. This is your equity, right? So if you try to understand those two equations, really you're going to be able to benefit from the accounting understanding and assessing your business performance, right? If your liabilities are higher than your assets, it means you have negative equity in the business, right? You need to do something to bring it back, right? You need to generate income, right? Or maybe, the best decision could be to shut down the business, right? So, understanding the relationships of all those terms is very important when you go about doing your business. So what are the basics of an accounting system, right? So if you're a small business owner, you obviously want to keep track of your finances of your business, and you want to be able to do it correctly. So what are those components, right? So first of all, you need to have a chart of accounts. The chart of accounts is a list of all your accounts. We're going to define that in a little bit as well. The next one is a journal, right? It's pretty much a diary, right? Like, a record of the business activities, right? As teenagers, many of you may have, been writing a diary, right? An account of all your activities for the day. That's the same for the business. The business has to have an account of all its activities for the day, and the accounting is done through a journal, right? The journal is just entries made to let us know that a transaction has occurred within the business. Through the journal, you get the ledgers, right? The general ledger and account-specific ledgers. Those ledgers are pretty much, your chart of account items, right? So any items that have gone into a specific account. For example, you could have the sales ledger, right? Sales ledger would list all your sales made. And you have financial statements. The financial statements are really key in understanding the business performance and making key strategy decisions. You need to be able to understand and assess your performance through viewing your financial statements. So your chart of accounts, you need to spend some time if you're setting up an accounting system like QuickBooks or another accounting software to ensure that you have a list of all the accounts that you think your business would need, right? We need to track. For example, obvious ones would be sales. Another one could be office expenses. On the other side, you have the bank account, right? You have a checking account. You have your cash account, right? If you have cash in hand, you have accounts receivables. Accounting softwares have a basic setup of the main accounts that businesses would use nowadays. You can scan the basic chart of accounts and see whether it satisfies you or whether you need to add any more accounts. What you also need to know is that when you're entering a transaction, you have the ability to add new accounts to your chart of accounts as well. You need to make sure that you don't put too many accounts, right? If you want to have a good chart of accounts, make sure you have the right amount of accounts, right? If you have, 1,000 accounts, it may be difficult for you to analyze all those accounts and try to determine why your business is performing in a certain way, right? The other thing I wanted to mention as well is you need to make sure that all the accounts that you want to track, that they're separated, right? So for example, if you want to track your variable costs, your labor costs, your raw material costs, you want to track, your shipping costs. If you want to track them per supplier as well, you need to make sure that you enter the suppliers, right? So you're able to see which supplier provides better value to you, right? So you're able to track all those through an accounting software, and you need to know how to do that. And that's what I'm here for. So you need to have performance indicators for your business. You need to go and say, hey, I need to track this in order to assess that my business is doing good or not, right? So you need to have all those accounts in mind. When you carefully set up your chart of account, it could simplify your taxes at the end of the year, right? If you have an accountant do your taxes for you, it simplifies it for them, so they spend less time on it. They might be able to pass some of those savings on to you. Okay, so how does the accounting information flow, in your business? So first, as I mentioned, your journal entry is the starting point. So a transaction occurs, right? A journal entry is made, right? Either through a bank account or a manual transaction or whatever it is. The journal transaction has occurred, right? It has been entered in the system, right? It consists of a debit and a credit at the very least, right? So debit your bank account, right? Because cash has come in. Credit your sales because you have made sales, right? So, and then, the bank account is reported as an asset, right? Debit, got money, right? Account, asset, bank up, sales is a credit, income is up. So that means, my equity is up, right? So that's how it works. So every transaction goes through the journal. Next, all the transactions from that journal go into the ledger. Now, you need to understand you don't need to do all those steps. All this is automated for you, The only thing you do is you do the journal entry at the very beginning. And the journal entry can be through the click of a button if you know exactly what you're looking for. Okay? So, again, as I mentioned, this is a very basic course because I want to be able to know what questions you have. So after reviewing this, if you have questions, ask me, I'll answer them. So from the ledger, so all the transactions from the journal go to the ledger. Right? Next, all the journal transactions in the ledgers are added up to get the account balance for each item on your chart of account. Those amounts, right, they're tallied up and they go into the trial balance. The trial balance is just your chart of account and the account balance is at a certain point in time. The reason this is done is this is used by accountants and is extracted in order to generate financial statements. Now, your financial statements are usually your profit and loss statement, your balance sheet, and your cash flow statement. The cash flow is very important for any small businesses to look at and to understand. So it's really important that you understand how cash is changing hands within your business, because this is how your profit is made through the movement of cash, buying and selling, providing a service, getting money back. So the cash flow is very important, even though a lot of people overlook that. Cash flow is a very important metric for any business. Okay, so the journal, let's go through the basic definition again. So it records every transaction of the company. It is used to determine the balances of the ledger items, right, of your chart of accounts. It has at least one debit and one credit, right? But there may be more, right? So for example, if you are registered for sales tax and you make a sale, the transaction is going to be, the sale was cash, right? So debit cash because cash has increased, and credit sales for the amount, net of tax, and credit HST payable for the amount of HST that we need to remit to the CRA. This is done automatically through the software. You need to understand how it's done, so that if you encounter any issues, you're able to fix them or ask me a question. Okay, so basic journal entries can be done by you, right? What will usually happen on the accounting software is you will be able to, sorry, I thought I was muted. So you'll be able to make those basic journal entries, right? The way it happens, sorry, I just completely went. The way it happens on QuickBooks Online is there's a bank feed, right? Most of your transactions are going to happen through your bank feed. Small businesses, there's really very little manual transactions or non-cash transactions that are done, or non-AR, AP related transactions, right? So most of your transactions are in cash, right? So for settlement now or at a later date, but mostly dealt with cash, not big accounting complex issues, right? So it can really be done through your bank feed. What that means is you go into QuickBooks, you give them your banking information, QuickBooks will pull the last 90 days of transactions onto the software, and you are going to tell QuickBooks what each transaction is for, right? This will account for your books, right? This will take care of your books if your transactions are done in cash, right? Or, or in receivables, right? So it can really be done by you as the entrepreneur, or you can outsource it effectively to, to a cost-effective contractor, because if you have the understanding, you will know it is done well, even if it's outsourced to somebody who's very, very cost effective. So you need to have that basic knowledge to ensure the accuracy and your decision making is optimal. right? So your ledger, I explained to you already, the ledger is really a list of your chart of accounts, right? Each account has its own um, line, so they will form part either of a general ledger or an account specific ledger. You have an account specific ledger if you want to track specific item, for example, sales. Remember that your accounting software does all this for you, so you don't need to worry about setting up a general ledger or an account specific ledger or anything of that sort. You just need to know that your ledger is a list of all the lines from your chart of accounts and all the transactions in them, and they will have a balance at the end, which gets transferred to the trial balance. And this trial balance is used to generate your financial statements. So your financial statements, profit and loss, revenue less expenses, pretty basic. There's other types of income as well that come in for more complex companies that don't go into the profit and loss statement, and they go into other comprehensive income. But for the purpose of this basic course, what you need to know is that your profit and loss statement consists of your revenue less your expenses. Your expenses are not just your cash expenses, they are non-cash expenses such as depreciation that comes into play. So you need to be aware of such items as well. The next financial statement is your balance sheet. Your balance sheet really is your assets, your liabilities, and your equity. Right? It's a listing of that. The difference between the profit and loss statement and the balance sheet is profit and loss gives you your performance for a certain period of time. For example, 1 year, 2019. Whereas the balance sheet is cumulative. It's the cumulative performance of your business since inception to a certain date, at a particular date. So your balance sheet shows your business where it stands based on its previous performance, where it stands today, or at a specific date. The next statement is the cash flow statement, and is really shows you how cash movement has occurred within the business. The reason you need to know that is you need to know whether you're spending too much cash in your operating activities, in your financing activities, or in your investing activities. Where is cash being most spent, and is there a way for you to reduce that, or is it providing the return that you expect on those outflows of cash? Right, so that's the reason why the cash flow is important. It will also tell you whether you're at a better cash position from the prior period as well. So interpreting financial statements is very key for any small business. You need to know what was your business performance, how it performed during the year. You need to know what needs to be done in order to get better numbers, in order to improve your performance. I've created this program in order to really help small businesses with their accounting, because you know your business, I know accounting. So you tell me what your problem is accounting was, I tell you the solution, you implement it in your business. So that's my approach. So you're going to be doing it yourself, but I'm going to give you a helping hand, right? This is the intent behind the Savvy Cloudpreneur. So interpreting your financial statements is one of those key aspects. You need to go back at your financial statements and you need to say, hey, I made this decision to go with this supplier last year. What has that done to my bottom line? Or, hey, this new customer came in and we provided this new service to him. How did this compare to the previous products that I was offering? Can you give those answers? Can you, really provide a tangible record of that performance, of how it performed, right? And really that your business, your profit and loss statement, your balance sheet, they will tell you that, right? You just need to know how to find that information, what link there is to that. right? So having the right, having up-to-date books, right information, right resources, right tools will allow you to improve your decision making. Also, it helps you get your taxes done, right? Nobody wants to get in trouble with your taxes. You want to always be compliant, but it can be a headache. That's why people end up being late, because it's such a headache to do that. If you have up-to-date books, if you keep steady, if you follow certain guidelines, or if you understand how to get things done efficiently, compliance can be a breeze. So you just need to set your mind to it, and it can be easy if you follow the right procedures and use the right tools. So as I mentioned, next week I'm going to provide a walkthrough of QuickBooks Online. Same time, September 7th at 10 o'clock. I'll be providing a walkthrough of QuickBooks Online. I also use a document management software which is called HubDocs, and I'll have a walkthrough of that on demand based on any of you, whether you want to see one of those walkthroughs or not. It's pretty easy, it's pretty intuitive, so you're able to really use that to your advantage if you want to use a document management and have all your receipts moved electronically. We'll provide basic accounting, such as as I mentioned to you, basic accounting we showed you just now. Next sessions will be QuickBooks Online. Have a costing, how to assess costs within your business and understand whether your costs are increasing, or assess whether you need to change the way you do business in order to improve your costs, etc., etc. I'm going to have a session on that following the QuickBooks Online course. I have pricing, etc., and budgeting, etc., coming up as well. This is all through my community, the Savvy Cloudpreneur community. So I welcome you to join me. It is free to join, and we do have a premium space which has a free trial as well. So you're welcome to try it for free. But do join us and post any questions that you have, and I'll be more than happy to try to answer them for you. Okay, as I mentioned, I do have a premium course in the Savvy Cloudpreneur community. The pricing is here. You can ask me any questions you have about it. There's a free trial. It's for 60 days, so you really, I really want people to benefit from it. If you're able to get everything you need within the next 60 days, take it and cancel your membership if you cannot afford it. If you can afford it and you feel it's useful, please be a member. I'll be more than happy to provide even more accounting issues that you want to address. I'll be more than happy to provide more insight of that as well. I mentioned I'm a former CRA auditor, so I have a specific tax component that I have as well that I'm offering to all my to people signing up for those courses. There's a basic individual course as well that I have. It's on Udemy, and I'm going to provide it for free to all my students as well. Why you should probably join me is, see, I have outstanding reviews from my customers, and they're really I really want small businesses to understand what their finances are telling them and what they need to do in order to go ahead. So this is really value. It's $150 for just the accounting course, or $200 if you want the tax component as well, which I strongly suggest you take. I'm very savvy about tax. I really like to learn about tax as well as accounting, and I want to pass that on to small businesses. So please join me. It's free to join. There's a free trial for premium spaces. I'll be glad to answer any questions you have regarding your accounting for the next few days. Next week is QuickBooks Online. So if anything comes from now till then, if you have questions regarding QuickBooks Online, make sure you ask them, and you can join us on Savvy Cloudpreneur, and we'll be more than happy to answer any questions that you have. Thank you very much. And This is the end of the broadcast.